Okay, so I'm just going to recap what happened to gold market today. Um, as we can see, there is quite a lot of fluctuations happening in terms of the gold price. Uh, it goes sharply upwards and then falls sharply. So there seems to be a bit of uncertainty here. Well, the uncertainty mainly stems from this Fed week, uh, and the fact that U.S. stocks are also mixed, as everybody is waiting for Fed decision and jobs report. But compared to last week, it's been a lot more uneventful in terms of economic news. Um, Essentially, the spotlight is on the Fed right now. The spotlight is on the U.S. Fed meeting, which is going to happen. Is going to take place on the 31st until the 1st of February. And in a way, the market as it looks like right now sort of reflects the mood. It can go one way and it can go another way in terms of the Fed decisions on the rates, on the interest rates. So the bigger picture here is that if the Fed slows down on the interest rates, inflation will come roaring back. But if the Fed pauses the rates for a little bit and inflation is still there, then in that scenario, gold price will take off. Now at this Federal Open Market Committee's meeting, it is expected that there will be a 25 basis point rate increase in the interest rate. This will bring the policy rate to the 4.5% or 4.75% range, which is going to be just shy of the 5% plus level most Fed policymakers were vouching for. And obviously, since gold is a asset which pays no interest, and it tends to benefit when interest rates are low, as it reduces the opportunity cost of holding bullion. In this case, they want to increase the interest rates, which would mean that the opportunity cost of holding bullion will increase, and therefore the price of gold will fall because it will have less demand. And also, the expectations for a slowdown in Fed rate hike grew after the Fed's preferred inflation gauge, the U.S. consumer spending. The U.S. consumer spending actually fell for a second straight month in December, putting the economy on a lower growth path heading into 2023, and that's obviously a bad sign for the economy. However, the number of people filing for jobless benefits keeps dropping, which is signaling that there is a tight labor market that could force the Fed to keep hiking rates. Meanwhile, benchmark US 10-year bond yields were hovering near 2-week highs, while the dollar was up 0.2%, making gold more expensive to holders of foreign currencies. So, to sort of summarize and to conclude, essentially what's happening here is that if inflation is still there despite a pause on rates or increases in the rates, if they decide to increase the rates, gold price will increase. But if interest rates increase, the opportunity cost of holding gold increases, which will decrease gold demand and gold price. Consumer spending is also decreasing, which means less income for firms, which is obviously a bad sign for the economy, and that is quite likely to increase gold demand and gold price. Jobless claims are also falling, which is actually a good sign for the economy, which will probably translate into lower gold price. And bond yields are high, which means the opportunity cost of holding gold is higher too, which means that there will be a decrease in demand and obviously price of gold. Plus, you have the dollar, which increased in strength slightly by 0.2%, which is obviously going to keep gold down, because of they have negative relationship, they have a negative correlation between them. So if we put all of this together, if we aggregate all of these things, the price of gold will probably continue to fall in the short term, and we can actually see that there is a downtrend. There's a downtrend in the market right now. So, however, in the long term, we are probably going to see prices increase back to 1,935 or 36, somewhere around there. But again, it's not clear. It's not clear what the Fed decision will be, and because of that lack of clarity, the market also lacks clarity at the moment. It can go either way, which is again being reflected in the market price actions that we see here. So yeah, the spotlight is on the Fed.